August 19, 2024. This is the S&P 500 E-futures mini on the 2000 tick chart using NinjaTrader 8. This is what the chart looked like today. It was very low volume, very low volatility. There was no economic data that came out to really move the market one way or another. And it was just a very, very slow, sleepy day. I ended up taking one trade and it was a loser. I looked back at it and I realized like, yeah, I probably should have let that go. Then afterwards, yeah, it was a really, really slow day. I just ended up doing a lot of reading, watching some YouTube videos, and pretty much just waiting for the day to play out. It wasn't really that great a day to go trading. We're going to the setups and the one trade. So you can already tell in the pre-market, there was a sell-off and a bounce. So sell-off, break of this orange channel, test, made a new low. I established the highs and lows of the pre-market here and here, but it still didn't really yield anything exciting. The first setup I see is kind of an almost trade. So you have a push on this green up channel, break, test a new high. So I'm thinking uptrend may have played out, but it starts going into this, what looks like a slightly bullish biased trading range. The first setup I saw, it ended up not being that great. So I couldn't establish where the highs, a consistent high, maybe up here, and the lows are a little more consistent for the trading range. And I saw this as the new high, not the high of day, but just at least a new high. It also ended up where I placed the pre-market high because it actually was a little bit lower right here, and I kind of dragged it up to here. It was a new high. It's a first entry long pullback. This creates a second entry long. Now I like this setup. No, I don't really like the setup for a trade, but I did like the fact that it went one tick below and then reversed and pushed up really strongly. The problem was, since this candle is so huge, it's 4.5, 4.5 points, or about 22 ticks, excuse me, not 22, 18 ticks. It's just too big a risk, right? But in order to even consider it, I would need the close to have been higher to the previous bar, at least matching the high or even above to have a full confidence it's a full engulfing bar. Because the other thing that was going for it was a triple test. But as I said, it's a little unclear and the risk is just too high. So I felt it was like an almost trade. Prices continue moving. There's a failed breakout of the pre-market high, whether you had it down here or up here. It's clearly a failed breakout. Pushes down. I was looking for a lower high to potentially see a trade, but I end up seeing this higher low after a confirmed first entry long pullback, second entry long. Second entry long, higher low. This is a good signal bar because it pushes below the previous and then rallies and pushes and closes above the previous. The thing that kind of had me pause was, okay, this candle here is 3.5 points, or let's see, 12, 15, 16, or 14 ticks, which is a little bit big. And at the time, I was thinking, am I actually here? Is there two attempts? And I actually dragged it down to here. So there's no official break on this side, but the support side, excuse me, the resistance side of this green Dan channel is pretty well established. And I was in real time thinking, am I going to have a rejection here and a flush back down? So I wasn't really sure of the setup and if it would likely push back up to the EMA. So here you can clearly see, it didn't have a clean breakthrough. It is a higher low, confirming the second entry long, but second entry long is below the EMA. It's a little far to consider it a failed breakout of this trading range at this point because the breakout is pretty much the same size as the range. So it was a little unclear to me which direction it would go because it could easily just kind of respect this resistance and come back down. So I left it alone. And then prices move up on this yellow up channel. It breaks, tests a new high, goes back, makes a second push. So I saw this like one push up, second push up, clearly a failed breakout of this pre-market high range. And when it pushed down, I thought, okay, this looks like it's a lower high. It looks like I'm ranging. So it's a first entry short. Actually, first entry short here, second entry short. But I saw it in the bigger picture of first entry short, neglecting the fact that it kind of broke a little bit here. I just saw it as one big move. First entry short, pull up. There's another short right here, but I saw it as first, second, and then a lower high. So I saw that and I thought, okay, it's coming from a failed breakout of the pre-market range. Break of this yellow up channel already made a high. It looks like it's ready to come back to test the EMA at least. So on the life of this candle, as soon as it broke below this guy, which is only 5 ticks, I said, I want to jump in on this trade and ideally get a quick 1 point scalp. So I can see it actually moves from here and it makes that 1 point, but it doesn't tick through. So I didn't get filled here, and it reverses and closes above my entry. And I thought, well, okay, maybe on this next candle, it's going to flush through and I'll quickly get my exit. It doesn't. It hangs out here and it makes me really nervous. And then it stops me out. It not only stops me out because my one tick above this guy is supposed to be at 55.9150, which would be right here, but actually I get one tick of slippage. So it's actually stopped me out 55.9175 from my original stop of 50. So it was my loss of the day. But then I looked back and I thought, it's kind of a slow day. It's already indicating that from the pre-market. So the prices move up on what I think is this purple up channel. It holds pretty well, except you have a second entry long here, but it's a doji, just kind of in the middle of nowhere, left it alone. You also have a second entry long technically right here. So it's a new high, first entry long, pullback. You have a second entry long. I didn't really like that it broke below the EMA. It seems a little ambiguous at this point. I didn't even mark it. I just saw it and I thought, well, it did have a break of this yellow down channel, tested the low. Is it coming back up? I wasn't sure. Left it alone. Prices move up. It gets a little, well, it gets very slow here. Comes back and creates a, what I call another almost setup, creates a new high, breaks through this trading range, breaks the orange down channel, makes one attempt down, sets up, and it creates a second attempt down. So in real time, I'm thinking, is there a short here? But I don't like this because it's an inside bar. It's a decent signal bar close, but where it's located is right inside this guy. It gives me a little bit of pause because I'm thinking this down channel wants to test the low, first attempt down. This could be the second attempt, but the uptrend of this purple clearly has played out. It broke, made two attempts up, break. It could be starting a second leg. I didn't like the inside bar, so I said I need to wait for a lower high, in the next couple bars, ideally hitting the EMA and rejecting. So almost trade here. And it turns out it was a good thing I didn't try to jump on that because I very likely would have, lost because it didn't move one tick to get my scalp. Then prices move up. It gets really congested. It's just very slowly grinding up. There's an overshoot here. It's a first entry long. Technically, I have a second entry long here. It's not a good signal bar though. Plus, it came from overshoot, so it could be making another push down in two legs when you see this in real time. So definitely left it alone. It's too congested here. EMA is starting to hold, so I'm looking for longs again because it looks like, it made one leg up, consolidate, it could make a second leg up, but I was also aware about how low the volume and volatility was. So I wasn't getting too ambitious, wasn't getting too hopeful, especially when I already got like a loss here, which kind of stung, but I was already thinking about it, but a little bit more over it at this point. So it pushes up. You don't really get a first entry short till about right here, because you can watch this. First time makes a new low is here, and then doesn't make a second entry short until later, but by this time it already broke and made a new high. So it kind of disrupts the count. I'm just watching, pushes up. I find this yellow up channel a little bit later, and I was working with some short and trend channels, but nothing really fit that clean. So I'm just kind of sitting, watching, and waiting. At this point, it's like 1 hour left, and I saw this as a new high, first entry long right here, second entry long, but with an hour left and a losing trade already, and also the day was very slow. I wasn't too optimistic on trying to get the loss back today or even finding a decent setup. Pushes down, it continues. I saw this as a new low, first entry short, second entry short. The only reason I marked this was I noticed the EMA was starting to show strength and I was looking for any reason to go long. But this is also very late in the day, so I marked it as an arrow, just something interesting I saw, but not worth trading because it's just moving very sideways right here. So the better, more rational part of me says, look at where the setup is. Time of day. It's 12:49, 12:50 Pacific Standard. There's only 10 more minutes. Do I want to risk, especially knowing that the last 10 minutes it gets really, really choppy? Do I want to try to go long where there's just barely enough room to get a quick scalp? Actually, you don't have enough room. There's only 3 ticks. 4 ticks if you're pressing it to this high, but you can see it already failed 2 times to hit it, but never go through. So I just marked it, saw it, because I like the signal bar, but signal bar itself isn't a good enough reason to take a trade, and it pushes up and goes into the close. So it's been very slow the last few trading days that I'm just wondering, is this kind of the calm before the storm? Because I know summer is ending on the calendar, and usually trading kind of picks back up for the last quarter, the fourth quarter. But that usually starts around, I don't know, later September, October, and we're still in August. So it's just kind of a really dry, slow price action. So I need to be aware of that. So tomorrow, I don't take another, I guess, trade on the impulse because in real time, I thought this was a decent setup. In hindsight, I realized, I probably should have just let this one go or let this one close before taking an engulfing. Engulfing, taking a trade on a candle that engulfs the previous or engulfing trade, it's always more risky because inherently you don't really know what the story is on this candle. You don't know if it's going to reverse and push back up. It could certainly do that, but you're also hoping that if it closes really nicely, and then you enter, you might miss the trade. But that's just something I kind of have to accept that I might miss a trade. And I think, you know, missing a trade is always better than taking a losing one because this is doing damage to my account. Whereas if I just miss a trade, my account just didn't move at all. So in a way, you're kind of protecting it on something that already looks a little iffy. And this was, in hindsight, a little iffy. So I think I was too eager. Just need to keep that awareness for the next few days in case trading just really, really grinds to a, well, really, really grinds. So hopefully that was helpful.